Good morning. Market grind higher continues. It's relentless. And at this point, well, today's Thursday. And kind of looked at it, the futures here this morning and thought, well, two possibilities here. Beginnings of an M top or acceleration to the upside as it reached this high. And getting closer to the holiday, I just can, it's hard to imagine institutions are going to sell. And I said yesterday, typically it's window dressing into the end of the year, the end of the quarter, rather than push the winners up versus taking the money off the table and offer the winners anyway. This has just been a lot of grinding, so there's a lot of stuff that the market holds up here. There's buyers on dip, but there aren't a lot of things that are just PayPal just moving. Tesla, of course. Apple's starting to kind of bring up the rear, but it's not your typical, market just moving higher relentlessly across the board. So, and that's, part of the reason we see that. Well, not the reason we see it, but it's reflected in our breadth internal, which has been deteriorating, which is there's a lot of stocks that really aren't doing anything, while the S&P grinds up to make a peekaboo above the prior high. The NASDAQ's going up, of course, but we saw this earlier in the year, and it resulted in a sizable market pullback. It came down to the zero line, and typically you get a little bounce from that in an uptrend, and breadth didn't get very far so far. So again, always we'll see what today brings, but on a positive side, and it's not into the green bands yet, but on a positive sign, the crazy bullishness of buying call options is, backed off a bit. And that is a plus. It brings our internal gauges more toward a neutral level. Not quite, but because this is just below what's normal in extreme 0.80. But backing off from the very extreme level that it was at. Pre-market, everything looks just fine. Uptrend, get a little acceleration in a wide range bar. So things stall, but nowhere near violating the trend. New reference points up. Line of support, which is at the bottom of the wide range bar. Ideally, you get this kind of price action. Well, this is a wide range bar after accelerating higher. This is a wide range bar after retesting the low. So different implications, but this one stayed in the upper half and then went higher. Ideally, if it's demand is that strong, this is going to stay in the upper half and then push higher versus coming back down under the low of the wide range bar. Does your outlook change at all based on the Fed yesterday? No, Glenn. Most of the time, some years ago, I went back and took the Fed dates over the course of a few years and marked the daily chart as to those dates. Basically had no effect. So intraday, you get the wiggles, but, when I haven't gone and done that in some time, but, when I did that review some years ago, there was no effect to say, okay, now, the Fed day made a difference. If it's a difference as to, all of a sudden a change from tightening to loosening, well, that could, I don't remember, when I did that study at the time, what had happened on those days. But overall, the Fed day made no difference. And Q's been where the strength has been after that most nasty, I was going to say nastiest red bar of the pullbacks that Wednesday. And then just right back up to new all-time highs, just grinding up there. and a little peekaboo over the 2-day consolidation on the weekly time frame. And these type of patterns that this is getting, it's tight, relatively tight, another wide range bar at the top there and moving up. But when you get these bars that are close together like this, it becomes critically important that it doesn't fail because of the building of a little support area that's close by. So, and as this begins to move up, and if it looks like this on Friday, of course, the expectation is for this to continue to push up. All right, it's at a big number, 13,000, but the resting period from the weekly time frame supports that it should continue to push higher. And of course, moving below a new high bar that is a range expansion bar is going to bring in sellers. So at this point, what you do is you're not watching it, hold that down there and set an alert. And you've got to be aware of that because as you're looking at other things, you may not be aware. Probably going to know what the cues are doing, but nonetheless, set an alert. Let the computer keep an eye on things for you. The Dow just continues to grind sideways in this really tight range. And if acceleration is in the cards, well, there's a base for it to do it out of um, for a few weeks. Down below, same idea. As things are going sideways in an uptrend, the view is that this is, buying after a run up. Well, of course, there's buying because it's not going down. But point being, the run up created a void and it's not pulling back. And that's a positive. So at what point does this get too long? I can't really say, but it's supposed to break out and push higher within an uptrend. If it breaks down below it, well, now you've got this base of created by buyers who are willing to absorb the sellers or supply at that time that are now holding losses. And this is the idea behind a price void within an uptrend where you get this accelerated move. Sideways price action creates a larger void, the move up, sideways. And then because of that sideways price action, they'd say, well, okay, the next pivot, and I've talked about that over here, like we're topping tail and some of these slowing momentum. Even I said this in the letter, even if it begins to pull back, the reference points are close by. But as time goes by and you get further away from these points, historically, the more you can discount them as being something that's going to hold. It's just what's happening is a bullish pattern just all of a sudden falls apart. So at this point, because of the uptrend, notice how the 20 MA is now catching up to prices and curling up underneath there. It's going to break out, or it's going to go down because it just didn't go up. People, investors, funds, they get tired and like buying. What the hell's going on? At some point, it's got to break out. So, you can see 3 weeks going sideways here and another inside week. I think it's time for something to happen. The Russell's been taking a little bit of a rest. It popped up. I got my mark here in the middle of the range. You see it kind of popped down there a little bit, came back up again. It doesn't kind of redraw that during the day. Doesn't make sense. That is anyway going down, and this didn't go down. But anyway, sideways at the top of the range, more consolidation, pulling back here a little bit, pre-market. It's rocking up here. Pre-market coming in here, and overall, what looks like something impressive intraday looked like a big nothing on a higher time frame. So bonds continue to chop sideways. More bottoming type of price action. Bottoming tail bar after breakdown. the 180 so far, just an inside week. See, we keep pushing up here. Gold. Well, let's look at oil first, which is up. This grinder. Look at the narrow ranges. It just continues to grind up. And where the momentum stalled there, the prior 2 weeks, it begins to pick up again. It looks like it's headed toward $50. Just picking the next round number. And like with any subjective reference point, $50, give or take. I think 50, 52 is where it fell from. Gold clearing the prior pivot high. And so making a higher low, clearing this area here, the weekly, a breakdown failure, and now it has to develop into a downside shakeout. And that is comprised of, now as it comes up into this area here, which in reality, the way this formed with the spike up and back down, in reality, the chart, the significance of this chart is this, which opens up the door to moving all the way back up because there's nothing to the left. Avoid. So it's not the greatest chart to get on board, but if you're willing to give it room, like under this pivot, if you want to buy, a gold ETF, or if you want to buy these futures, a leverage gold ETF fund, would say would make sense. Make a half position with a big stop. Sell a put spread, yeah. It's not, yeah. I mean, I look at this chart like we look at any chart and say, what is the probability of going back under this low? Well, we all know it's possible. However, with a pattern like this, it's not probable. And that's what we need. And you might say, well, what are the exact probabilities, Greg? Give me a percentage. And I would say, well, I can't. Just bar by bar. What does the next bar tell you? If the next bar is a green bar going up, well, you could say, well, that's even less likely. So if you ask me here, what's the probability of going under this low when the first green bar, let's say, well, probably relatively pretty high, but that's an impressive reversal. And then if you ask me on this one, just like we look at things on SPX, how far does it have to go? Well, over here on this one, I say, well, now it's less likely. That's even got to travel even farther to get under the low. And now that it's broken out above this, obviously got to travel even further. So selling a put spread, let's say if there was premium, just like we look at SPX, at 1800, a whole number, which would be a line of defense. Say, go for it. If you ask me, what's the probability of going under this green bar's low? I'd say, well, that's relatively higher than going under here. A lot of stuff we do is just plain old common sense without any indicators or, magic stuff on the chart. Looking to the left. And now we look to the left here, and the only advanced concept on this chart where others would say, well, what about all of this? Well, my self-education in the markets and looking at patterns like this, scratching my head, saying, well, how the hell did that go up like that with all of this to the left? And after looking at hundreds, if not thousands of charts, I came up with the rule. Well, if it trades above and back below, it neutralizes it, which is just more common sense. It was used as a reference point, as resistance, and to some degree support. And the way this one came down, it just doesn't matter anymore. But people will be looking there and questioning that. There's nothing to stop this from going up at this point, other than creating resistance. You know what that's about if you've taken the course. Silver, which has been showing relative strength to gold, looks great. I mean, it's all the way up at the pivot high here. Let's go back to gold just to reinforce that idea. You don't need special indicators to measure relative strength. You compare trends and bars. And look how far gold is from that high. And look at how close silver is. It's right there. So maybe a little sideways action here. This is setting up to continue to go higher. These wiggles, news-driven market, 2020 will go down in history as some news crazy-driven market and crazy price action. So we're looking for this to bottom out over here and then broke down, and now it's right back up again. Yeah, AGQ. That's Jake. You've mentioned that, rightly so. The was it triple leveraged? And lots of gaps because of the gaps in the underlying commodities. And you can see the pattern here is coming up. We're gapping, going to gap up there. It looks good. And we don't usually look at this, but keep an eye on the euro. It's coming up to a significant resistance point up here. It's got room to get up there. I've set an alert here. So when this comes up there and look at it's accelerating, right? So acceleration from a base suggests continuation. Now here's the pullback and it's accelerating again. And now coming up to close the void. Well, why do we want to look at that? Well, because one of the positive things, right, as far as, the markets and earnings for US companies is that do business overseas is the fact that the dollar's been going down. And when the euro gets up to that resistance, there's going to be sellers. And then the dollar, I don't know if it'll get down to this low, but you can see the inverse relationship between the two. And so as the dollar at some point starts to rise, oil is not going to have that support. And it may affect to some degree gold and the broader markets. So while our internals have slowed things down a bit, slowing momentum, his correction has been sideways. Any doubt of that? Just look at the Dow. And the S&P's done a little better. And of course, the Qs came down hard and now they're at a new all-time high again. But keep an eye on this. Nothing's going to happen today because there's room before it gets there. But being aware of these intermarket relationships and setting alerts give you that heads up, not to get blindsided by something that you had no idea, and then looking for the reason why all of a sudden it changed. Of course, the real fly in the ointment of late is the transports and that nasty bar that happened, which the market really doesn't care about. But historically, I've seen that lots of times where the transports just start deteriorating and markets don't care, but it's not to be ignored. So there you have it, and all the things to keep aware of. Market continues its corrective price action of grinding it higher, and certain stocks doing really great. Others sitting there doing nothing. So anyway, sorry, but you show 31.29 does not compute. For what, Neil? Want to let Dan come on, but for what? Oh, that's to Dan then. He's the AM. All right, Dan, all yours.
All right, hey Neil, I'll fix it. It's just $20 wide. So it's 2,900, not 2090. Whatever, I'll fix it. But it's $20 wide. That's the only way you can get that midpoint. Well, let me fix it now so I don't start getting emails. $3,100. But all our opens are fine. Yeah, Amazon, I wish I got us into yesterday. So
I
30,
looked, I thought, I saw the strikes, the differences between them so tight, you had to go real wide, but it seemed like a no-brainer. I didn't put it in the room. I mentioned, when I saw it, I said, makes sense to strike under the wide bar, but you had to go, I think, pretty wide to make it worthwhile.
all right, 3,100, 3,100, 30, 30, 80, $20 wide. All right, closed at 280. And, I'm wanting to get a little pullback. So why don't we say, or even I'll just say 260 is fine. I know, but I had to fix it. All right, so our opens are fine. Let's look at gappers. FSR 16. It's a power bar here, but no pattern. This little express spot. This is the thing in airports. Blasting off here. We'll come back to it. Housing, I was looking at yesterday. Interest rate sector broke out from a little W bottom. Gapping up here. I saw Lennar. There's zero, tradable pattern on the daily, but gapping up here from this mess, it could be a put spread. 2750, big gap up here. We need to come back to it. LL has been, remember this lumber liquidators look at that. This is the Chinese laminate company that people thought it was going to zero, and I did too. What a comeback. Wow. Twilio, I like the pre-market action here, all-time highs. We'll keep an eye on that for the put spread. Root, IPO, that's doing very poorly. But today, I don't know, we'll see. Maybe today will be the something bar to turn it around. Trit gapping down 890. This is a nasty gap. Yeah, we're in Apple directional and put spread, and they're doing great. Zulu Sierra, yeah, bullish ascending triangle here. Maybe 30-minute high. Zulu Sierra looks great. Dunking, we're in from yesterday. I also like that as a put spread. Yeah, I posted this over lunch that we would do a put spread into the close, but I unfortunately was out doing a webinar yesterday afternoon. ABUS 503, no great pattern there, William. Gap into resistance. GDX long intraday. It's a bullish pre-market. It's right at this. It's right at this prior high, but if it can hold maybe 30-minute high on GDX, day trade on Apple, sure, 30-minute high. 30-minute high looks fine. It's a bullish 1, 2, 3. We'll see what the markets can do. CSX, we're still short, and it's just neutral here, but if it can crack these lows, you can add to it. Hey, what's up, G? Mealy, I don't see where you're gapping, but that's a strong trend. This is a big mess, no interest. Roku was in the news. It's getting HBO Max. I mean, to me, that's just meaningless, but it doesn't matter. It's what the market thinks about it. The market likes it, gapping up to all-time highs. A solo. And it's worth watching. I mean, it's a bottoming pattern. It's a retest. I mean, I'm glad that it takes a while. It's not one that we have to rush into. But it's shaping up. ABM, a bearish gap down. Bravo Echo, no pattern. Swabi, I think, said they were doing stock buyback. This is Smith & Wesson, no pattern. Miller Herman was bullish the other day, but had earnings, so that's gapping down. No great pattern. Lennar again had earnings. Oh, there's Lennar. Lennar, since it had earnings, the premiums will be jacked. That's a definite put spread candidate. Look at our Apple coming in. I might tighten the stop. Zulu Sierra, Jake or McGraw, that looks great. This looks great for a new trade. Let's watch 5-minute high. I mean, the thing's, it's 9:31 and I just don't buy in the first minute. It's just part of my trading plan, but if this holds, the daily, weekly look fantastic. Dunking, if it closes here, it's a 1, 2, 3. We have a put spread on it. Here's a bearish gap down. This would be a call